5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
What's up, y'all? I'm Andrew from the Options Millionaire community, and today we're going to be talking about the number one indicator for options trading. And that indicator is, drumroll please, the rectangle. I know what you're saying. That's not an indicator. That's a drawing tool used for analysis. Well, I'm going to show you just how important it is to use this tool to identify supply and demand in the market to help you not only become a better trader, but to better understand what's really going on behind the scenes in the market. Now, modern day trading has shifted from the old time of very data-driven, very analytical-driven, very foundational-driven trading to very visual trading nowadays. It's because everyone has a broker now. In the last 10 to 15 years, with the onslaught of different brokers that has opened up the investing world to all sorts of retail investors, they all trade off of these type of softwares and brokers that are very visual. Everything is based on candles. Everything is based on indicators, waves, lines, graphs, wedges, triangles, shapes, etc. When people think of learning how to trade, what they're really doing is learning how to read indicators, which is not trading. What I'd rather you do is start to make analytical decisions that are proactive based on what the market is actually doing or what you expect it to do in the future. And that's what I'm going to show you how to do here with supply and demand. Now, placing these supply and demand zones on your charts is really just a practice in figuring out and seeing where sellers want to sell and where buyers want to buy. Now, this happens across multiple time frames, short and long. So when I place these, I want to place them on multiple different time frames. The higher the time frame, the stronger that supply or demand is going to be. So on the daily chart, that supply and demand is going to be much more difficult to breach than the 5-minute chart, the short-term stuff. And it really depends on the type of trade you're going to place. If you're going to be scalping, you place supply and demand on the 5-minute. If you're going to be taking swing trades and long-term investments, you want to be placing supply and demand on the daily or the weekly or the monthly chart. Here, I'm starting out on the 15-minute. So what I'm looking for here is an extended period of time on this time frame where the price action either consolidated or pivoted multiple times at one particular level. Now, right here, we see it's obvious that the market consolidated and pivoted right in this area between 45.90 and down here to 45.82. And it's also evident by the spike in the high volume node on the volume profile to the left. So what I'm going to do is come over here and take the little rectangle, and I'm going to just draw a zone between the high and low of the major pivots. Now, why didn't I include this price action right here? Well, we saw that it broke above briefly. Then it came back down and bottom wicked into this zone and multiple times, using it as support, and then eventually broke back down and then used the bottom range as support again. So in further trading, I want to be aware of this zone. So if we were to bounce back up into this, I'm not going to be chasing long positions into this until we transact this data and move on. Now, it really is as simple as that. It's an extended period of time where you could figure out the high and low of the price action and plot those on your charts. Because what this tells me is that the buyers bought this up into a zone. The buyers weakened, the sellers came into play and started to sell these shares to defend this range. And then the price action transacted lower. So digging a little bit deeper, we also know that there's going to be weak buyers in this area. So once we do come back into this area, I'm not going to be looking to long aggressively right off the bat because I know that there's people that had bought up here that are desperate to get out of their transactions. So once we come back in there, once those buyers are now broken even, they're going to close out and there's going to be a lot of consolidation and fluctuation here. But this is what it'll look like. It'll bounce back up, it'll transact below, it'll break above, come back down to retest, and then it'll break out. And I want to be a buyer here on the retest of the prior supply, now support. But let's see what happens in this case. We see the price action come on down, obviously. Now we start to get some buyers to start to defend a little bit downwards. We come into it and then bam, we reject. Twice we reject. We came back up right inside this zone. We fall off on back down. Does it happen this beautifully all the time? No, but it happens a lot of the time. It happens so much where you could start to become proactive at this. And all this is to figuring out where the sellers want to sell. Prior supply, prior demand. Now let's go figure out a demand zone as well. All right, now here's a great example of a demand zone where buyers want to buy. Now this is going back from April 27th, 2023, all the way to May 18th, 2023. So about a month, give or take. And you see that every time the buyers enter this range, there's always going to be some choppy. We broke above, we came on down again, we defended, we broke above, bounding back and forth. A couple of times we break above, but we always come back to the mean reversion in a period of consolidation. You see on the volume profile here that the POC, which is the largest distribution of volume, starts to form right at 41.37. And then here on May 17th, the price action breaks above, comes back down, retests, breaks higher, and up above. Now, we don't know if the price action is going to come back down. This thing could break above and just rally for a couple hundred points. We don't know that. And that's not the intent of the zone. This intent of the zone is that if this were to come back down into the zone, we know that there's precedence for strong historical buyers right here at 41.37. And that's what we'll be looking for. In this case, we get a pretty quick test of this zone. We break out, we have a couple of days of consolidation, price starts to weaken and starts to drop. Now everyone right here is thinking, holy crap, it's time to start shorting, right? I'm going to start chasing this thing down. I'm FOMOing into some puts all the way down. Price action drops right into demand to defend, and we could extend this zone out to see even more, right to the bottom of the range, and then it consolidates a little bit more, a couple of periods as buyers start to hit the tape to defend, sellers start to buy to close, and off we go. Just a great example of applying the demand on the 15-minute chart. Now let's zoom out a little bit more to the 2-hour chart. This is a little bit above the 15-minute, and I want you to get in the habit of doing this on several time frames as we talked about earlier. This one, I really want to talk about how do you go about finding the major pivots in the market. Now it's really not rocket science. You take your little box indicator here, and you just look where the major pivots are. Here we see the market transacted up into this range, and we have two major bounces at this level. This one in particular, a major hammer with significant volume. So I want to plot the bottom line right here. And the top line, I want to come to where these major moves start to fluctuate. So the major move comes up here, starts to fluctuate right here. The major move comes up here, starts to fluctuate right here. And that's pretty much where I'm going to draw into my demand. Sometimes they're tight, sometimes they're a little wide. Either way, it doesn't have to be crazy accurate. The whole theme here is just to understand where the market wants to start to transact buyers. Now, this is obviously a 2-hour chart, so I'm not going to be scalping off this chart. These are going to be longer term trades. If I'm putting on like a 3 or 4 or 5 week dated call, then I want to know that somewhere in this 30-point range that I need to start thinking about closing out the transaction, stopping out of the call, whichever it is, or even entering a call in this area if I waited for this to come back down. But you see that as the price action comes back down, it uses the same exact area as support, comes back down, rejects at the same area here, even right here, and then here again before finally basing and moving higher as price action starts to tighten. Now remember, it doesn't have to be crazy accurate. I'm not looking for one single little point here for this market to bounce. I'm looking for just a range where buyers are going to start hitting the tape so I can start to make my decisions. Now, in terms of looking for when it's going to break out of this zone, I look for tightening price action, which means absorption. Tightening price action here like it does here. You see the price action tightens, and then bam, it explodes. It means absorption. Buyers are hitting the tape, sellers are leaving the tape, and then eventually we transact and move in this direction. In this strategy here, the acronym KISS, keep it simple, stupid, absolutely applies. Keep things as simple as possible, and you can get a huge impact on your trading. All right, so let's zoom out and do some analysis on a higher time frame. This is the daily chart, which means every candle you see here is one trading session, one day. Now, this is going back to the 4100 zone, which is the main pivot in the market right now. Even to this day, 4150 still remains the main pivot point on this market, going all the way back to 2021. And already off the bat, you could see an obvious supply zone right here. We have the highs and lows of this range. We have the highs and lows of this range. We have a couple of pivots, so it tells me every time the buyers enter into this zone, the sellers come in and transact. So we plot the highs, we plot the lows, and you can go all the way back even into 2021 with this. If you zoom all the way back, you could see bounces and rejections back in 2021. And you could see on the volume profile right here is that it's one of the highest distributions of volume accumulated on the node. So there's a lot going on at 4153. So no surprise that when we entered this range in April of 2023, look what happened for 2 months is that we consolidated exactly in this range for 2 months. Now, additional analysis shows that every rejection off this level becomes tighter and tighter. Let's look right here. This drawdown, the bounce, this drawdown and the bounce, this drawdown and bounce. The drawdowns got tighter and tighter and tighter until finally we break out and go higher. So this is a good example of using these major supply zones where there's so much supply going on right here that every time the buyers enter, the sellers hit the tape and transact. The sellers hit the tape and transact over and over and over again until we have what's called absorption. The buyers enter this tape so many times that eventually there's enough buyers to overcome the sellers and we have complete absorption. And now the buyers are free to move this thing higher. Now there's a little bit more to look into this, which is a deeper conversation for VPA, volume price analysis. But this right here is the number one thing you can add to your charts to better understand order flow and to be more proactive with your trade. I guarantee you, if you start at the 5-minute and plot zones, demand and supply all the way up into the daily, weekly, monthly, you will start to see these zones. They'll pop out at you, supplies and demands. And that'll keep you from taking puts at a strong demand zone right before it bounces. And it'll keep you from taking calls at a strong supply zone right before it rejects and comes back down. I can't stress this enough. If you are a beginning trader looking for consistency, looking to gain an edge, this is the number one thing you can add to your charts, the number one practice you can put into play that'll help you not only become more consistent, but it will teach you to start identifying supply and demand in the market. It all boils down to the fact that the market is an auction house. It is supply and demand. That's all it is. We get so wrapped up in the visual nature of charting and indicators and all this nonsense that it all boils down to understanding simple order flow. There are buyers and there are sellers. There is supply and there is demand. When the price becomes too low, the buyers hit the tape. When the price becomes too high, the sellers hit the tape. And plotting these zones helps you identify when and where that happens. I challenge you to give it a shot and then come back and tell me in 3 months that it did not work for you. Anyway, that's all I got for you. Come out and join the server. Watch the live streams. We do this every day. If you have any questions, I'll be happy to take the time to answer. Links are down in the description of the video if you want to come over and join the community. I appreciate you taking the time to watch this video, and I'm out. See ya!